landscape shifts, key trends impacting the U.S. wireless market. So some of the key areas we're going to be looking at today include the current competitive state of the U.S. wireless market. We're also going to look at the impact of fixed wireless access services and cable MVNOs on the U.S. wireless market. So just to clarify, by FWA, fixed wireless access, we're referring to the home internet services being offered by T-Mobile and Verizon. So we refer to by FWA, and cable MVNOs. So those would be the wireless brands being offered by the cable competitors, such with Comcast. They have Xfinity Mobile. Also with Charter, they have Spectrum Mobile, and also Altice USA with Optimum Mobile. And we're also going to be looking at key trends that will impact operator business performance in 2023. So I'm Steve Vachon. I'm a senior analyst within TBR's telecom practice. So I have my email there. If you want to follow up with me afterwards, you can also find me in LinkedIn as well if you're interested in connecting. So taking a look, here's an overview of TBR's telecom-related research portfolio. So we covered the global market. Most of the content today is going to be from TBR's U.S. mobile operator network. We cover a lot of different areas impacting the telecom market, such as private cellular networks, 5G, edge computing, also hyperscalers. That's a focus point for us. Also, the impact that they're having on the telecom industry. So we have a variety of benchmarks, market forecasts, market landscapes covered in those areas. We also have dedicated company coverage as well, including network vendors, companies such as like Cisco, Huawei, Ericsson, Nokia. So we have dedicated quarterly reports on those companies. We also cover the telecom operator side of things too. So we have some company reports on companies such as AT&T, T-Mobile, and Verizon, and others. So diving in on the top U.S. Trends we're seeing in the U.S. wireless market. So one of the things that we're seeing is that U.S. operators are revamping their strategies in response to macroeconomic challenges. So if you look at inflation, it's having a twofold impact on the U.S. operators. One is they're incurring higher operating costs. So we're seeing rising expenses in areas such as wages, energy costs, fuel costs. So that's causing some pressure for the operators on their margins. So we're in response to that. So we're definitely seeing see their budgets tighten, and we're seeing some new cost-cutting initiatives being introduced, such as Verizon. They have a new cost-cutting program. They're looking to cut $3 billion in OPEX by 2025. Also see the operators streamlining headcount as well to help in response to those rising operating costs. Another thing that we're seeing that's impacting operators in regards to inflation, so we're seeing consumers, they have lower discretionary spending. So in general, wages haven't been keeping up with an inflation. So you look at consumers, they got to be examining their budgets. They have higher, rent costs or fuel costs. They need to cut back on their spending in some areas. The operators are lucky in the sense that, smartphone services are essential to most customers. You're not going to be dropping, their smartphone plans altogether. But it's going to cause some consumers, they're going to, they're going to look to see how can I cut back their spending. It's going to lead to some customers, trying to find lower prices in the market. So we see the operators responding to that. We're seeing some new entry-level plans being introduced. Verizon Welcome Unlimited. That's like one of the main offerings that have been released over the past year. So another trend that we're seeing is FWA currently provides the best opportunity to 5G revenue generation. So if we look at 5G development in the U.S., you can say it's still been a little bit underwhelming, to be honest, especially look at the consumer market with 5G smartphones. So you're getting some benefits with that. There's going to be, a quality of service benefit with that. You're going to have, faster download speeds. But if you really look at things, there's not really a whole lot different that you can do with your 5G smartphone compared to the LTE smartphone. There's really no app out there that really needs 5G. So it's been kind of slowing development on the consumer side, not having those that killer 5G smartphone app out there. Also in the enterprise market, so we're seeing a lot of opportunity in the long term. If you look at some like 5G related enterprise services, such as private cellular networks, also mobile edge compute. So we see a lot of opportunity with those segments. They're still very much in the early stages. A lot of customers, a lot of businesses, they're still like trying to find out what the business case is for those technologies, what the use cases are. So it's still very much the early days for those enterprise technologies. But we look at FWA in the U.S., that's been the most robust opportunity that we're seeing currently. Especially if you look at subscriber growth over the past year. So it's been very robust looking at T-Mobile. So they've grown to 2.6 million fixed wireless customers. Also with Verizon at 1.5 million. So those price points are really appealing to customers. So with fixed wireless, in most cases, you're going to be having a cheaper price point compared to like the cable broadband option out there or the fiber broadband options that are out there in the market. That's been definitely driving customer growth for the operators. Looking at the other side of things, we also see cable MVNOs are disrupting the U.S. wireless market. As I was talking about before, you see the disruption from the telcos. They're disrupting the broadband market with FWA. So we're seeing the same thing. We're seeing the cable MVNOs. They're likewise disrupting the U.S. wireless market, especially if you look at Comcast with Xfinity Mobile, also with Charter with Spectrum Mobile. They've been accelerating growth pretty much each quarter. Looking at 4Q22, they're able to gain record high net additions in 4Q22. And we're still going to see like further disruption in 2023. We're seeing some new entrants in the market as well from the cable providers, such as Cox Communication. They have a new brand in the market called Cox Mobile. Also, Wow Mobile, that's another brand that's released recently that's from the cable operator Wide Open West. So definitely see some disruption on that end. Definitely have the lower price points by the cable MVNOs. So it's definitely appealing to the price-sensitive customers amid the current inflation that's impacting the U.S. So the next slide here, so the table on the left, we have the rankings of the top U.S. wireless operators. So we still have Verizon leading. Also on the year-to-year, you have year-to-year listed on the right side of the table. So still a lot of opportunity for the operators to sustain revenue growth. Notice most of the companies are still increasing revenue. I'm going to delve into some of those drivers in just a minute. There are some outliers on here. T-Mobile, for example, you can see a 2.5% year-to-year decline. This is mainly due to equipment revenue. So we've been having some slower device upgrades. So if you look at the core business, it's still in a very strong position, still growing the customer base, still increasing revenue, still increasing profitability. So they're still in a very strong position in the market. UScellular is another company that has some revenue declines in 4Q22. They're seeing some pressures in the rural markets. Historically, that's been their strong suit, is targeting those rural markets. But they've been having more competition the last couple of years, especially from AT&T and T-Mobile. Those two companies have been very focused on building out their networks in the rural markets, also increasing the distribution as well. That's creating some pressures for UScellular. And we also see Dish. There's a significant revenue decline, 21.4% in 4Q22. So they've been having a very difficult time retaining their subscriber base. It's about 500,000 customers they lost in 2022. Looking at revenue growth drivers, there's still robust opportunity to sustain wireless growth in the U.S. So one of the main drivers is continued connection growth. There's still that opportunity to gain net new customers, even though the smartphone market still is relatively mature in the U.S. There's still those net new customers to target. One area that's coming from is this population growth that's helping to drive that. Another area would be business services. So we're seeing a lot of businesses implementing smartphones to a greater extent. Security, I think, is a big driver of that. So a lot of businesses, they don't want to have like their corporate applications, corporate data on their employees' personal devices. So we see a lot more businesses, adding those corporate-specific lines for their employees. Also, we're seeing some smartphone usage. Smartphone adoption is increasing amongst younger age children as well. That's a trend that we've been seeing. I think that's largely driven by safety concerns, parents being concerned for their children, being able to communicate with their parents like during emergency situations. And I feel that's one of the drivers that we're seeing of younger age children using their smartphones. Another driver that we're seeing is premium unlimited data plans. They're still seeing a lot of customers move up to the higher tier plans. Just a lot of new incentives coming out. More and more streaming services are being added to these plans. Also, mobile hotspot coverage, I think, is a really strong incentive for customers. Especially, you look at the influx of remote work, traveling employees, having that benefit of having a mobile hotspot, being able to provide connectivity to your laptop as you're traveling. That's been a very strong incentive for customers. Some other drivers, FWA subscriber growth, greater cable MVNO brand awareness. I'm going to delve in a little bit more in the next few slides on those topics. Also, connected device portfolio expansion. That's been a driver, especially wearables. With the Apple Watch launch cellular about like 4 or 5 years ago, that has really caused an uptick in wearables connections for the operators. Connected car is also a very strong segment, especially for AT&T. They're usually generating a few million connected car additions each quarter, usually wholesale connections from the automakers that they're getting from. And also some other drivers to be returning store traffic. So basically store traffic has returned to pre-pandemic levels, then improving roaming revenue. That's also pandemic related as well. You look at the early stages of the pandemic, you had the travel restrictions that had a negative impact on the roaming revenue, but that's largely subsided. So we're seeing travel activity resuming, and so that's been improving the roaming revenue growth rates. Some inhibitors that we're seeing, macroeconomic challenges, that's causing some customers to migrate to lower cost service plans, also like lower cost devices as well. Maturity of smartphone market and also lengthening upgrade cycles. So basically customers are holding on to their smartphones for a longer duration. There's less compelling features coming out in the newer devices. So it's that's having an impact on upgrade cycles being prolonged. And also see aggressive pricing promotions. There's still, especially on the device side, we still see those offers in the market. The free iPhone 14 promotions, the free Samsung Galaxy promotions. So it's having some negative impacts on the operators in terms of revenue and profitability. And also increased switching activity. So that returning store traffic is positive in the sense for the operators of helping to fuel gross additions. But if you look at the flip side, their customers are also checking out the other carriers as well that increase store traffic. So you're seeing some elevated churn rates as well from that returning store traffic. So look at the next slide. So looking at some financial metrics for the operators. So if you look at the x-axis, we're looking at wireless EBITDA margin. The y-axis is year-to-year revenue growth. And the size of the bubble relates to how the amount of revenue they're generating. So Verizon's the largest bubble, so they're generating the highest revenue. Some call-outs on here. So we look at the margins. There's some pressures that I talked about before from the rising operating costs from inflation. So one of the key areas is the higher wages. So there's some significant wage increases amongst the operators to take Verizon, T-Mobile, Charter, for example, they've implemented $20 an hour minimum wages, some other wage increases of the other operators as well. So that's that pressure the operators facing. So in response to that, we're seeing the operators streamlining their headcount. Looking at headcount year over year in 2022, the operators had reduced headcount for the most part. It's the part of that has to do with inflation, compensating for that. In terms of streamlining headcount, we're seeing a lot of digital transformation initiatives being advanced for the operators, especially if you look at areas such as digital sales and digital customer service. And that's like a prime way for the operators to reduce their headcount expenses. You're looking at digital sales. That's been growing in adoption. We're seeing consumers being more comfortable with digital sales, being more comfortable activating devices on their own. So there's getting some cost savings from that trend. Also on the customer service side of things, we're starting to see some deeper implementation of AI technologies. One of the prime examples of that would be Verizon and T-Mobile. So they're both using a contact solution from Google Cloud that's AI-based. So there's some cost efficiencies they're getting from that. So looking at the companies specifically, so if you look at Verizon and AT&T, so they're still leading the market in profitability. But you notice T-Mobile is just narrowly behind Verizon and AT&T in terms of wireless EBITDA margins. So we're seeing T-Mobile become more profitable. If you look before the merger, they had a significant gap in their margins compared to Verizon, AT&T. But the Sprint merger has definitely helped them to compete more closely with Verizon, AT&T in margins. And we're going to see their margins continue to grow and near closer to AT&T and Verizon. One part of that is their synergies. So they're targeting to reach $7.5 billion in synergies in 2023. That's what they're expecting to reach. That's that. And also they've incurred most of the merger-related costs from the merger as well. So, the earlier days after the merger, there's actually some pressure from the merger from incurring the high merger-related costs. But those are largely subsiding. Those are going to be largely finished in 2023. So we're going to see T-Mobile move closer and closer to Verizon and AT&T in margin performance over the next several years. Just a few other call-outs as well. So if we look at the cable and MVNOs on this graph, so you have Xfinity Mobile, Spectrum Mobile, and Optimum Mobile. Xfinity Mobile is the only company so far that's been able to generate a positive EBITDA. So far, Optimum Mobile and Spectrum Mobile is still operating at a loss. But we think both of those companies are going to gradually improve their profitability over the next several years. Because they scale out, they build their customer bases, they're going to gradually offset their operating costs. The other thing that's going to help out the cable operators with their margins is them beginning to offload traffic onto their own cell sites and spectrum. Comcast and Charter both talked about that. There's going to be some cost benefits from that. So both those companies, Comcast and Charter, most of their network traffic is primarily through their Verizon network agreement. Being able to offload traffic in strategic markets is mostly going to be the largest markets with the most traffic that they're going to offload traffic onto their own network. Doing that's going to help improve their margins. It's going to have a significant decrease in their roaming expenses that they pay to Verizon. So the next slide, so we're looking at postpaid net additions for Q22. So you look at T-Mobile, so they're still leading the market. It's about 1.8 million connections. Just one important thing to note, so this graph here, so this is total postpaid net additions. So it's not just phones, so it includes other things as well. So it includes things like tablets, fixed wireless connections are included in here. Other devices like mobile hotspot as well. So there's a variety of different devices included in these connections. It's not just smartphones. So looking at T-Mobile, so they led again in 4Q22. They've been dominant in the market the last several years, so they're leading in most quarters. I think the big driver of that is the overall value proposition that they're offering. So if you look at the rates, they're a little bit less expensive than Verizon and AT&T, but they're providing a very robust ecosystem. It's a very sticky ecosystem that's helping to attract and retain customers. Streaming services would be a big example for T-Mobile. So we started with Netflix. That's evolved to multiple streaming partners. They're partnering with Apple TV Plus now, Paramount Plus, and MLB TV. There's multiple streaming partners that they have. So it's a very strong incentive for customers. Also, T-Mobile Tuesdays, that's their reward program. So there's actually very compelling incentives being offered through that program each week as well. So that's helping to retain that subscriber base. Other new incentives, over the last year, there's been some new stuff they've been offering too. Free Wi-Fi streaming on airlines. They have partnerships with most U.S.-based airlines now. That's been a strong incentive as well. So looking at Verizon, so they ranked second with 1.4 million net additions in 4Q22. It's been important to note with them. So if you look at their postpaid phone customers, there's only 217 of these connections are from phones. So basically, there's 1.4 million total connections, 217 were from phones, about 1.2 million or so were from other devices. There's other devices, I'd say fixed wireless is a big driver of that. It's almost 400,000 connections from fixed wireless for Verizon at 4Q22. I think wearables, I didn't explicitly say it, but I think wearables is a big driver for Verizon as well in 4Q22, especially following the launch of the Apple Watch 8 and the Apple Watch Ultra. So I think that helped to drive their connections as well. But if you look at their overall postpaid phone net additions, so it's been a little bit of a challenge for them, especially in the consumer market. So they've been trailing T-Mobile and AT&T and that side of things over the last year or so. So definitely facing some pressures. I think the biggest driver of that is their price points. So they still have the highest price points in the market. But if you look back in the LTE era, they could justify the higher price points in the market. Back in LTE, they definitely had that network advantage. They're pretty much consistently ahead of their competitors in LTE coverage. But when we look at 5G, T-Mobile has actually been consistently ahead in 5G coverage. So that's been a challenge for Verizon. So it's been more difficult, marketing themselves as the network leader when you compare it to T-Mobile's 5G coverage. So it's been a challenge for the company that we've been seeing. For AT&T, so 1.1 million postpaid net additions in the quarter. So they're still performing very strong. They had 656,000 connections from phones. So they're just behind T-Mobile when it comes to the high value new smartphone customers that they're adding. They've been performing very strong in the business services segment, specifically, especially FirstNet. That's the dedicated public safety network that they have for first responders. So that's, had very favorable responses from that. They've been gaining about 300, 400,000 new connections each quarter from FirstNet. That's a strong driver of their subscriber growth. They also had some shifts in their distribution strategies that have been successful for the company. One of them is they've been increasing their focus on targeting mid-market enterprise. They're driving growth through that. Another thing they've been more focused on as well is targeting their existing AT&T fiber customers and cross-selling their mobile services to those customers. Up next, we've got the cable MVNOs ranked next. So, strong performance still for Spectrum Mobile and Xfinity Mobile in 4Q22. Biggest driver for that, I'd say, would be the pricing. So they've been more aggressive in pricing and targeting more of the multi-line accounts. So if you look at the early, the initial start of the cable MVNOs, is mostly focused on the single line customer. So only been in the last year or so, last year, 1 to 2 years, they've been targeting families through multi-line accounts. So it's been more aggressive service plans that they've been offering, the more connections that have been enrolling in the plans. That's been very successful for them. It's definitely been helping them to take market share from the tier ones when it comes to the family line plans. Optimum Mobile, so it's 4,000 net additions in 4Q22. They've been a relative laggard in the market. Most quarters have been pretty low subscriber growth. But I know the ELT's USA, EL definitely wants to become more aggressive in the pricing. With Optimum Mobile, they also want to be more aggressive both in the service pricing and also the device promotions. They also been expanding their retail footprint pretty aggressively as well. So Dish, we only got 1,000 net additions. So if we look at Dish's business, it's mostly prepaid customers currently. So most of Dish's subscriber base is from Boost Mobile, which is in prepaid. Currently, for Dish, their main postpaid brand is Pig Mobile. It's a very small brand. There's about 200,000 customers they got from that. That was an acquisition they made about 2 years ago. So it's been a very small business for them, which has been relatively flat for Dish. But over the next year, we're going to see a lot more activity from Dish in the postpaid market. So they have a new service, new brand that they've been launching. It's called Boost Infinite. So it's still pretty much in the early days. It's mostly offered to early access customers via invitation. But this is going to be the flagship brand in the future for Dish. I mean, most of the 5G initiatives are going to be rallying around this new brand called Boost Infinite. So we're going to see a lot of activity around that over the next couple of years. So, I mean, they're going to be very competitive in price. So what they're offering currently is a $25 unlimited data plan. And that's one plan they're offering. So they're going to be very much focused on one low price point. Very simple pricing structure is going to be their focus through Boost Infinite. Then we look at UScellular. As I talked before, they're having some challenges within the rural markets. They've been very focused on aggressive device promotions. They had a device promotion, basically let a customer choose any device they want and have it for free. That's been a focus. The strategy behind that is that to get the free device, there's a contract period they need to remain a customer for. So that's basically, a way to ensure that UScellular can reduce churn, provide them, any device at no cost, but they need to remain a customer for about 2 years for that. So it's been what they've been focused on. So the next slide here, so this really highlights the opportunity that cable MVNOs have to gain market share. So we look at the left side graph. This is a comparison of how much market share the telcos have in terms of U.S. wireless revenue compared to the cable cos. Even though the cable MVNOs have been rapidly growing their subscriber base, but we actually look at the market size. There's still very small players in the market with about 2% market share. So this highlights, the vast opportunity they have to take some market share against the telcos. And also the slide on the right, the graph that we have on the right side of the slide. So this highlights the opportunity the cable MVNOs have to target their existing broadband customers. So basically this graph here, this is basically shows the portion of wireless customers, portion of the cable operators broadband base, which is also enrolled in the wireless service. So if you look at Spectrum Mobile here at 10.6%, so this is basically taking Charter's, residential broadband customer relationships. Out of that, only 10.6% of those customers are actually enrolled also in Spectrum Mobile. It's the same thing here with Comcast. 9% of Comcast residential broadband subscriber base. Only 9% of those customers are also subscribed to Xfinity Mobile. So this showcases this highlights just a vast opportunity that cable operators still have to target their existing bases. And, it's a very, with these customers, and there's, several different methods they can do to reach out to them. And just having email addresses, they have their email addresses, just, sending out promotions through email. Also flyers, mailing out flyers. Another thing is their store footprint. So all these companies are expanding their store footprint. So they definitely have that opportunity to target their broadband customers when they go in the stores. Look at the situation if someone needs to go into the store to update their modem. The sales teams within those stores, they have a very strong opportunity to push to market their wireless services to their broadband customers while they're in the store. So this next slide here, so delving a little bit more into fixed wireless services. So you look at the graph on the left. So we got broadband net additions in 4Q22. So this helps to highlight the significant disruption fixed wireless is having in the U.S. So you look at T-Mobile, that's 524,000 broadband additions in 4Q22. That's exclusively fixed wireless. Again, we have Verizon. They're ranking in second in total broadband net additions. So most of these connections are from fixed wireless. Is 379,000 of those 416,000 connections were from FWA. There's some few thousand of those connections were from Fios as well. But you can see just how disruptive FWA has been in the graph. Comparing to the next competitor, Charter, T-Mobile and Verizon had about 4 times as much customers as Charter, 4 or more times more than that. So they're very disruptive. So where the customers are coming from, there's the 3 main groups that we're seeing that are migrating to FWA. One would be the legacy transitions. So this would mostly be older network technologies such as copper. If FWA is becoming available in those markets, there's going to be a significant speed increase for the most part if it's 5G FWA. The other group of customers is net new covered pops. So this would mostly be the rural areas, locations that didn't have any other broadband options previously. And then the next group is probably the biggest driver of adoption. I'd say it's customers of existing broadband services, having, several different broadband options, but they're seeking a cheaper price point compared to the cable cos and other broadband providers. I think that's driving a lot of the FWA subscribers is, customers seeking out that lower price point. So you look at FWA, we see it being sufficient for most use cases. The everyday use cases is video streaming, supporting remote work applications. It's sufficient speeds in most cases, and you're having a significant cost savings as well. Looking at the opportunity with FWA, about 1/3 of U.S. households are currently covered with FWA. So the operators are going to be gradually increasing FWA service availability, but it's going to be a measured approach. We definitely see them having concerns about capacity. They definitely don't want to take an approach where they're launching in a bunch of markets at once and a bunch of, they don't have the capacity to support that. There's congestion issues arising. They definitely want to take a measured approach to launch to, markets, even at a customer level. They want to ensure they're going to have the needed capacity to provide a strong quality of service to these customers. In terms of capacity, there's going to be some things that are going to help out with that. If you look at mid-band 5G deployments, those are still going on with C-band. There's other licenses as well, the 3.45 gigahertz spectrum. You're going to see further deployments of those. So it's going to help out with net capacity, helping to add FWA customers to the operators' networks. Another possible opportunity is millimeter wave 5G. Verizon, initially launched FWA over a millimeter wave. But the operators are, they're exploring that for more like opportunities, especially if you consider extended range technology that some of the vendors are starting to develop. So basically, the extended range technology, it provides a significant increase in the coverage range over FWA, over millimeter wave spectrum. So one of the things that we saw was UScellular. They actually tested this with, I think it was Nokia and Qualcomm a couple of years ago. So under these tests, they're able to test gigabyte FWA speeds at a range of 6 miles. So that's a significant coverage increase than typically what was possible before over millimeter wave spectrum. That's definitely an opportunity. We can see some potential for FWA expansion. So we're seeing a lot of like adoption in consumers. I'd say for the most part, we're seeing a higher adoption rate amongst consumers, but there's also businesses. FWA is gaining traction amongst businesses as well, especially the smaller businesses that we're seeing. One of the use cases we're seeing is like a business that wants to launch a new branch location. So a company that wants to get a new location launched quickly, but they want to have like a fast install time to their broadband. They don't want to be like, waiting weeks for like a wireline like broadband provider to come to their location to install it. So a lot of like customers, they're installing FWA because it's much faster to install compared to fixed broadband. So I think one of the main drivers of adoption that we're seeing. Also like specific, work environments, more of like remote locations. We're seeing some FWA adoption amongst those type of locations as well. Say like a construction site, that's like an ideal environment we're seeing for FWA. Much easier to get FWA out there than say a construction site than have like a new fiber connection built out just to a construction site. So those type of environments have been like drivers for FWA adoption amongst businesses. So mostly seeing it among small businesses. When we look at the larger businesses, it's going to be more like stringent network requirements, service level agreements. So when you look at the enterprise thing, you're still going to see a lot of wireline broadband be predominant within the larger enterprise. But we're seeing some of the larger enterprise are actually using FWA more as a backup connectivity solution. So basically, these large enterprises all have like a dedicated fixed wireline broadband connection, but they're still deploying FWA more as a backup situation. Say if their primary fixed broadband connection, fixed wireline broadband connection that goes out because there's a natural disaster, or there's a storm or something going on, they're going to have FWA to serve as a backup connectivity solution in those type of situations. So there's some pricing models here. So some of the new pricing models that we're seeing is taking more of like a converged bundle strategy. So these pricing models, the focus is combining both residential broadband, so that's either going to be like a fixed wireline connection or FWA, and then combining that with smartphone services. So one of the main example that we've been seeing is from Charter. So this is a new offering, Spectrum One. So if you take a look at this, so basically what you're getting is 300 megabits per second. That's like the broadband residential connection. And it's also providing one line of Spectrum Mobile unlimited data line. It's only for $49.99 a month. So this is a very, very competitive price point. Since Charter has been leading the charge with this, with some of the other cable operators exploring this as well. Comcast is a similar offering. They just started offering to some customers. Also, Altice USA, Cox Communication, they also talked about how they want to further their converged bundle strategy. This is happening on the same side of the operators as well. So this is T-Mobile's offer on the right side. So basically what they're offering, you can subscribe to fixed wireless for $30 a month if you're also subscribing to the Magenta Max unlimited data plan. So this is a $20 discount. Fixed wireless is usually $50, but under this package, you're getting it for $30. So again, a very competitive price point offer here. So what's driving this is definitely about improving the overall value proposition. I think it shows like both the cable operators and the telecom operators are becoming more cognizant of the competition, that they're providing against each other. They're being more competitive, bundling everything within a single package. This is also going to help churn in the long term. If there's if a customer's enrolled in multiple services from a service provider, it makes things more sticky. They're going to be less likely to change another service provider. If they're getting both broadband and a smartphone service from one single provider, it's going to help to retain them. If they have to switch, you might have to find a separate cell phone provider, separate broadband provider. So this is definitely about making things more sticky. As a result of this, I think we're going to see more. If we look at subscriber growth in the next few years, there's going to be a closer correlation between broadband subscriber growth and smartphone subscriber growth. It's going to be more closely tied together because of these bundled packages. You'll see, customers enrolling in both smartphone and residential broadband services at the same time. Just quickly go over some of the trends I'm seeing in the prepaid market. So if you look on here, so these things are very challenged in 4Q22. Most of the operators have lost customers in that quarter. So what's driving this? So overall, we're seeing more customers move over to prepaid to postpaid. The biggest driver of this, I think consumers are seeing a greater overall value proposition offered by postpaid compared to prepaid. If you look at prepaid, even though you're getting like a lower upfront rate, consumers are seeing a greater overall value in postpaid, especially if you look with all things factored in. If you're factoring in the streaming services, the higher mobile hotspot coverage, the device promotions. Most consumers are seeing that being a greater value proposition overall, even though the sticker price might be more expensive. The other driver that we're seeing too is that we're seeing the improved credit scores. So more customers are qualifying for postpaid plans. If you like during the pandemic, there's stimulus payments. This helps to improve credit scores. Consumers paying off their bills, that in turn improving credit scores. So more customers are qualifying for postpaid as well. So it's been impacting the prepaid segment for operators. Another thing we're seeing in prepaid is fixed wireless. That's starting to gain traction within the prepaid market. If you look at T-Mobile, so they launched that, I think, March of last year. So they're offering fixed wireless through Metro by T-Mobile. Same thing with Verizon. Towards the end of last year, they started offering prepaid through a couple of their brands. I think Straight Talk Wireless is one of them. Also, I think from Visible as well. So the benefits of that, one, so it extends the availability of fixed wireless services. The subprime customers, the customers with weaker credit scores, they have access to FWA now. It's also helping out the distribution of FWA as well. So if you look at T-Mobile, for the most part, they're T-Mobile postpaid stores and then Metro by T-Mobile prepaid stores. They're separate stores. Usually they don't cross-sell the services within each store. That's definitely helping to increase the distribution by offering FWA through the Metro by T-Mobile stores. It's the same thing with Verizon as well. So they're actually selling their Straight Talk Wireless home internet service. It's being distributed to thousands of Walmart stores. That's going to help to drive FWA adoption within the prepaid market. Last thing we're seeing in prepaid markets, so we're seeing the impact of acquisitions. So look at Verizon with TracFone that closed, I think, November 2021. So the acquisition has been a little bit challenging for Verizon, so they've been having a hard time retaining a lot of those customers. I think we're going to see a lot of like a revamping of their brands over the next few years. So they offer like 10 brands right now currently under the TracFone umbrella. I definitely think we're going to see some consolidation within that side of things over the next like 5 years or so. Less brands within TracFone, helping them become more differentiated from each other. I think we're going to see that from Verizon. Also with T-Mobile, so they just announced a Mint Mobile acquisition. I think it's going to be very beneficial for T-Mobile. So look at Mint Mobile. They have a little bit different of a pricing model, so they're focused on like selling prepaid services in advance. So basically, under Mint Mobile, you can buy your prepaid services like 3 months at a time, 6 months, or 12. The further you buy out your services, you get a more discounted rate. So this is kind of a differentiated pricing model they're going to have through Mint Mobile. It's going to help them to better target the lower end of the market as well. I think it's also going to help them target the younger demographics. To look at Mint Mobile, it's definitely kind of the cool and hip marketing. Ryan Reynolds, the actor, is the founder of the company, so he's involved with a lot of the marketing. There's a lot of type of humor that would appeal to those type of customers. Another benefit for Mint Mobile is going to be easy synergies for T-Mobile. So if you look at Mint Mobile, so they've been like an existing T-Mobile MVNO. So their network's already on a T-Mobile network. So there's not going to be like a whole lot of like new network costs coming from the acquisition. We don't need to worry about congestion from these new subscribers coming on the network, since most of them are already on the network as it is under the T-Mobile MVNO agreement that Mint previously had. The two companies previously had. Another thing too, if you look at Mint Mobile, it's a digital first company. So they don't have like their own stores, so they're not going to have those hurdles from the acquisition. T-Mobile's not going to have to worry about added expenses to support these new stores. What stores they need to like consolidate, those type of factors. So it's very like easy, like seamless synergies you're going to receive from this merger, from this acquisition. I think that's what we're going to go with some of the main like CapEx trends that we're seeing. So if you look at this graph here, so basically looking at wireless CapEx. This is exclusively wireless CapEx. We estimated out the portion that would be wireline focused. So looking at 2019 to 2023. So if you look, there's been that gradual uptick from 2020 to 2022. And looking at 2022, specifically, we think this last year was the year of the peak spending for the operators in terms of 5G deployment. So you see like pretty like significant increases both for T-Mobile, AT&T, and Verizon last year. That was really driven by the race to get the mid-band 5G spectrum out there to remain competitive, especially for AT&T and Verizon. It's very like crucial for them to deploy that C-band spectrum as soon as possible to catch up with T-Mobile. So we see that peak spending last year. We're going to see things cooling off a little bit in 2023, and likewise in the next couple of years too. We're going to see things decelerate from 2022. This is an overview of where things are standing currently. We're looking at mid-band 5G. We definitely see like mid-band 5G that being the ideal spectrum for 5G. So you look at mid-band spectrum, it has like the ideal balance of speed, capacity, and coverage. So looking at things like in 2021, you can already see like the advantage T-Mobile has gained to the Sprint merger. So they had that 2.5 gigahertz spectrum they acquired as part of the merger. That has given T-Mobile a very strong competitive advantage in the market. So they're already at 200 million pops at the end of 2021. But if you look at Verizon, AT&T, you see the very aggressive spending that they that took place. They acquired the C-band spectrum, $5.29 billion for Verizon. 27.4 billion for AT&T, and this doesn't include like the billions of extra dollars and deployment costs those two operators are incurring. So I mean, this basically showcases like how important mid-band 5G is to the operators that Verizon and AT&T would spend so much. On one side, I think it's the right move for Verizon and AT&T to be competitive in 5G. But it's also a challenge if you look at things. Acquiring the C-band spectrum is, it's been a challenge for Verizon's, AT&T's, debt load, also for the financial position, balance sheet. So it's definitely the challenges from that. And it's also going to be very difficult to get like a full return on investment from how much they spent. So it definitely helps them remain competitive, but from T-Mobile, but the revenue generating use cases that's going to come from the mid-band spectrum is going to be challenging to get that back. So over the next few years, the end of 2022, so we saw T-Mobile still ahead 260 million. Pops for Verizon is at 175 million, and AT&T is at 150 million at the end of 2022. So if you follow the next years through 2023 and 2024, you're still going to see Verizon still having a significant coverage advantage in mid-band 5G. They're looking at like 300 million pops by the end of the year. It's not going to be until at least like 2024, 2025 that we're going to see Verizon and AT&T reach those coverage levels. Just to summarize, 2023 industry outlook, these are like some of the main trends we're going to be seeing in 2023 and beyond. If we look at the financial model strategies, we're going to see operators being remained focused on cost-cutting initiatives to offset higher operating costs due to inflationary pressures. Another thing we're going to see is operators may potentially implement additional rate increases to help offset inflation impacts. AT&T and Verizon definitely haven't announced anything concrete about rate increases, and they definitely hinted that might be a possibility if things come to that. In terms of go-to-market strategies, we're going to see operators leveraging new entry-level service plans that appeal to price-sensitive customers. We're also going to see bundles combining mobility and residential broadband services become more prevalent. And also, under resource management strategies, we're going to see operators will remain focused on expanding 5G coverage while implementing technologies including 5G standalone, carrier aggregation, and massive MIMO. So you're going to see some speed increases, some coverage benefits from deploying those technologies. And then we're going to see operators will continue to streamline headcount via digital transformation initiatives. All right, a few minutes for Q&A. Your list of questions that you're sent, take a look at them. Yeah, so I have a question regarding my views on I think it's about operators leveraging broadband in place of to supplement FWA in some areas. If I'm understanding the question correctly, I think it's referring to having fiber instead of FWA in some cases. So T-Mobile would be like a predominant example, I think is what you're referring to. So they've had, they've actually been launching some early stage fiber deployments in a few markets, initially in New York City. I think that was maybe a year or two ago, and they just announced there's 2 markets in Colorado where they're deploying fiber as well. So I think they're branding it as T-Mobile Fiber, but if you look at these arrangements, they're not actually out there building out their own fiber. It's more about leveraging existing ISPs, leveraging open access networks to provide fiber. So there's definitely that opportunity for T-Mobile in that regard. It's going to be, it's going to be based on partnerships. It's going to be based on the most viable markets they can do. I think a big thing at T-Mobile, so they have their own carrier strategy. So they've been they're very focused on eliminating pain points in the industry. They did that with their wireless, removing early termination fees, removing contracts, this type of things. So they're going to do the same type of thing with their fiber strategy. It's going to be, removing the pain points, upfront price points, no commitments, no rate increases, this type of thing. So you're going to see that. Also the opportunity, just leveraging those open access networks for the operators. There's several different markets that's going on. I think Mesa, Arizona is another one too. So it's helping with the deployment costs, leveraging partnerships, using open access networks to support like fiber to the premises services. Other questions? So we have a question about uptick in store traffic. Uptick in store traffic is mainly relates more of comparing to pre-pandemic levels. So if you look at the early stages of the pandemic, you see the gross additions were impacted by the store closures. So that has like some difference on the year-to-year rates. But if you look at the later stages of the pandemic, with the stores resume opening, it's actually been beneficial with the year-to-year growth rate. So I wouldn't say the store traffic has increased compared to pre-pandemic levels. I'd say it'd probably be around like the same ballpark as that.